Hi everyone, it's Mark here at TSLA, and Tesla did very well today, closing at $273.58, which was an increase of $25.08 per share, or 10% essentially on the day. Now, we all probably know that this is due to the Adam Jonas upgrade from Morgan Stanley. Morgan Stanley's Adam Jonas has moved Tesla over to overweight from equal weight, with the price target adjusted from $250 to $400. And we also discussed last night what the price action kind of looks like sometimes after an Adam Jonas upgrade. There was 4 examples that we saw. It ranged anywhere from 57% to a near high, sometimes over 100%. So it could be a spark of a rally in Tesla. But like we discussed yesterday, that, I think getting through CPI will give us the information we really need to determine is this going to be something that's going to be sustained. We've seen really strong moves over the past couple of weeks in Tesla, anywhere from 7+%, be retraced almost fully within a couple days, sometimes 2 days, 3 days. We've seen moves even just last week where we're outside of the estimated move for the week, only to sell back into almost a flat week. From being up, a couple more percent. So the move is really explosive, and there are some examples where that on a gap up and being bought up all day, where that move can kind of keep going. But I think that's going to be really going to be dependent on the macroeconomic conditions. Otherwise, I think maybe a little bit of a pullback at the very least would be kind of called for if inflation comes in not so great. And I think what we need to do is just real quick, just take a look at what levels we need to watch when it comes into Tuesday and Wednesday's trading. And I didn't have any levels. I think you know that above 262. So I drew some basically very obvious levels that we need to watch. And firstly, it's kind of where we near closed at. We kind of bounced off this peak, this wick on this high from, looks like the 25th of July. And we closed a little bit higher from that. And we also have a gap that we're dealing with just above our current price. So the gap is going to range from 280 to 290 essentially. That's very convenient. As we all know, Tesla really respects the $5 increments, and if not, like the $2.50 increments in its pricing. So that's going to be really easy to watch. That if you get any nice moves tonight or even tomorrow morning before the market starts, you want to kind of look out for resistance at that level, which is the bottom side of the gap at 280. And if you get into the gap, it's going to be a pretty sharp move to 290 within a very short period of time. This could be something like a day. I'm not saying tomorrow's day, but a movement with to that wouldn't be surprising if it was done really quickly on some type of good catalyst, because it's really only a 5.7% move from where we close up today to filling the gap. So we know we did over 10% today. So what's 5.7%? Probably on any type of good news, it would be a really, really easy fill. Just as a word of warning, as we get above where we're closed at, I would say anywhere above the 280 range or 275 range, there's really not a lot of volume in this particular area. Like if you were to have a volume profile, it is basically going to be like kind of a vacuum. So movements into pricing above us can be very, very quick. So let's just be really ambitious. Let's set some upside targets to this move. Let's say inflation comes in really, really good on Wednesday. Where are we looking at for this kind of rally to end? Number one, of course, making a new high for the year would be great, meaning just closing into the 300 range, which would be just really above the peak from the day of our of earnings. And what about kind of making a new recent high? Where do we go from? If we were to bull really hard, I would really aim for anywhere from around 313 to 330. That's kind of an area that's going to be really interesting to me. And what would that move look like if we were to do that move? Let's say we're really ambitious. It's a 20% move to around 330, and to the bottom side of my target, that would be something like 313. So that would be a very reasonable 14.5%. Basically, that area just puts us above the consolidation that we had before Twitter was purchased, this would be, taking out these highs, I think would be really pivotal to some type of bull story for Tesla. So simply closing above this and kind of consolidating above this kind of consolidation range, I think that's going to be key for a move that would turn this kind of long-term pattern that Tesla's been putting on since I guess the all-time highs for the past couple of years. This would start to even look like what a lot of people would call a wick off accumulation or reaccumulation, and we'll look at that real quick. But I really wanted to take a look at, since there's not a lot of news today, the really only important news was the Adam Jonas upgrade from last night. There is some kind of cool stuff that came out today because, as we know, and as we talked about yesterday again, that Walter Isaacson's biography of Elon Musk is going to be released tomorrow morning. I know you're probably reading excerpts from articles from major newspapers and online news sources, little snippets of the book already. And you probably heard that some outlets already have a full copy of that book. And we're also seeing foreign countries having earlier access to the book. So some information is coming out. So before we get to what I want to talk about for a couple minutes, which is a calendar spread, basically we talk about selling calls a lot here. And I hear on podcasts and I hear from people on Twitter, and basically the idea of selling calls is really hard for some people to really stomach, because, if they even just go back to recent history from the rally in spring into summer, a lot of people lost out on that move, selling calls after moving up maybe 20, 30%. They feel that's a great move. They sell a call against their shares. They don't manage the call, and they get their shares basically taken away at a huge loss based off the current value of that day that their shares are called away. But let's just go over to our browser real quick, and I just want to show you guys something that I thought was really, really interesting, and that it was a picture from Elon Musk's biography that kind of corroborates something that people were looking at in the CNBC television clip that was uploaded to YouTube that only USA based people could really watch. But firstly, here's the drawing, sketch, or some type of basically black and white picture that was part of a beginning of a chapter in the Elon Musk biography. This was positioned below a group photo of the executives. But anyways, this is what is being considered the next generation Tesla, not necessarily the Model 2. I don't know if they really have a name for it other than the code name in the company, which they call the robotaxi. Now, Elon Musk has said on Twitter that the robotaxi, though maybe the assembly line is easily adaptable to a car that can be self-driven and not be a robotaxi. So there's going to be like maybe parallel assembly lines, one building a robotaxi that might not have any way for a person to self-drive, and another version of the vehicle that will have all the normal steering wheel, pedals, etc. for you to drive. And that's probably going to be something that's really required to get volume to the point where the car is affordable, right? Elon really stresses and tries to help us understand that, okay, the price cuts are coming, it's basically, it's a small sacrifice in his mind to keep volume up as much as possible. So his factories are running as much as possible. And yes, I do know we're having some slowdowns in Berlin. I get that. But the idea is keep volume up, keep cost of goods down as much as possible, try to just keep the margin just acceptable in the period of time where we are in now, which is really high interest rates, lack of demand due to the cost of the extreme cost of procuring money. But so here is that drawing of the Model 2, next generation vehicle. And you can see it's a two-door vehicle. It's only a two-seater. And I wouldn't be surprised if the self-driven version of this car, one that you can drive yourself, that would have probably the option to have some small back seats. And the reason for it being only a two-seater, from what, anecdotally a lot of people are saying, is that, most taxi rides, if you just consider taxi rides, Uber and Lyft, most of those rides are single passenger rides. So the idea that you need to have a four-door robotaxi, maybe that's not necessarily true, where I think the average is somewhere like 1.3, 1.4 people per taxi ride. in the United States of America. So if you want to keep costs down, make this car as affordable as possible to either be purchased or to be run as a fleet, having a 2-passenger setup makes sense, because you got to realize, if full self-driving and autonomy is fully activated in America, you can turn your car into a robotaxi. So your 4-seater Model 3, your 5-seater Model Y, or 7-seater Model X, those cars can be kind of just farmed out for people to rent whenever they want to. If they need to go to the airport and need to move a lot of people and a lot of luggage, there's gonna be a lot of Tesla owners that would be happy just to make a little bit of extra cash, having their car be turned into a robotaxi or what have you. So I like the idea because it's really all about keeping costs down and making this car affordable as possible to make the adoption of electric vehicles, especially ones from Tesla, as widely accepted as you can do. Now, this is, I wanted to show the picture of a screenshot from the CNBC. It was a video about Walter Isaacson, but Franz actually just happened to have a little cameo appearance talking about the Cybertruck, talking about Elon's personality. But this was a photo that was in that video that shows him. Now that we've seen the drawing, we can basically say, yeah, like this is essentially what their idea of the next generation vehicle is going to be. It's a 2-seater with some luggage space. I know the drawing looks like it's a 3-wheeled vehicle, but from the looks of this cardboard or wooden mock-up, it is a 4-wheel vehicle. It's just that kind of like a Honda Insight. If you have seen those cars from like the early 2000s, where they actually have a portion of the side panels covering the rear wheels, which I never understood. Well, yeah, I get it. It's, for aerodynamic purposes and efficiency, but, as far as doing your own maintenance, it just makes it a little bit harder. But yeah, so essentially it's very similar to like a Honda Insight. I wouldn't be surprised if this actually is similar to a Honda Insight in just in dimensions. But yeah, so the idea here is kind of like almost like a comfort thing. You can see how much legroom you're going to have in this robotaxi. So it's going to help your ingress and egress. It's going to make the whole ride more comfortable, because if the majority of people that take taxis are solo or duo rides, then yeah, you just stretch your legs out and try to make the experience as enjoyable as possible. The dash is really far ahead because you might not even really need to interact with anything. You can put your food or your drinks there if you're a neat passenger, that is. And I believe they're also wanting to do some type of gull wing doors, like kind of flies out and up on the hinge, which is interesting. I wonder if it's better to do some type of like something, a type of a movement for the door that doesn't have to swing out. So, you don't get into situations where the door could be hitting things if it's going to be automated. But really cool, really interesting. So I kind of had this idea that the next generation vehicle was supposedly based off Walter Isaacson's quotes, like a Cybertruck inspired design. But I think it's really just more futuristic, not so maybe not angular and not made of stainless steel. Though if it was made of stainless steel, you can really eliminate a lot of costs when it comes into production, like the whole paint shop. Like that can just be completely just removed from the cost of making assembly lines and the cost of the vehicle. And I wonder if when Cybertruck comes out, if the whole kind of bought a car wrap becomes kind of a more acceptable thing as far as aesthetically for the potential next generation vehicle. If it really picks up for the Cybertruck and it's not like a huge turnoff and the quality of the wrap is there from whoever's providing it, 3M or otherwise, maybe you can actually just go that way if you're running a fleet of these vehicles, because they might get dinged up, or passengers might be a little bit careless around them. So having a way to keep up the aesthetics of the vehicle by simply just exchanging parts of the wrap could be a lot more affordable when it comes to a long-term maintenance of the exterior of that vehicle. That could be a thought. But let's go back to the charts. It was cool to look at the car, but this obviously can change over the course of the next couple of years. But I do believe they're starting to work on that layout of the assembly line for this vehicle in Austin. I would assume very, very soon. Okay, looking back at the charts, I want to talk about the calendar spread that I put on for a trade last week. And we always talk about hedging our positions, and especially using covered calls as a way to generate premium, as also to prevent a little bit of the downside that Tesla has been seeing recently, or not really even just the downside. Just ranging, going sideways for a long time. Selling calls could really net you a nice little bit of income on the shares that are really just doing nothing sometimes. But so a lot of people, when they sell calls, they just don't really actively manage that trade. They think it's just a fire and forget type of hedge. And yes, you can treat it like that. But I would say if you were to sell a call, you are now an active trader. You're actively trading Tesla and you need to manage the trade. It's no different if you were to buy a put. Like if you're buying a put for a hedge on Tesla, what if Tesla moves up 5% in an hour? Did you have a stop loss on that? Maybe you told yourself, I want to buy this put. I think, maybe we're topped out for the week. But if we're not, I want to put like a 20% stop loss on this contract. And that's what I'm willing to accept as a loss to prevent a little bit of downside if it was to happen in the immediate future. It's no different than a covered call. If you're selling a covered call, you can simply say to yourself, if this call goes up 10%, I'm closing it out by buying it back. Or you can do what I do sometimes, is just turn that covered call instead of just like a one-legged type of transaction. You can go and buy a call, which would be now your upside hedge. So if we see a lot of upside, that call that you buy will help you prevent loss of value on your contracts or your shares or what have you. So let's kind of explain my trade. So on Thursday last week, I sold a call for $272.50 as a strike, expiring at the end of the month near around the 28th of September. The premium I collected on that was $380. And due to today's move of 10%, that thing went up to $1,275. Now, when Tesla went down on Friday, I bought a call that would expire this Friday. And that call was for 270 strike, expiring on 9/15, purchased for 51 cents or $51 essentially. And due to today's move, that contract is now worth $8 or essentially $800. Factoring the premium that I collected on the call that I sold and factoring also that I paid $51 for my insurance call, my calendar spread can be closed out for $146 essentially in my mind. I can close that out for $146, and my shares that for 100 shares that were being used as collateral for the call that I sold, I can now preserve $2,500 of that increase in my share value for 100 shares, right? If not, like imagine if you didn't have a call bought and you only had a call sold from last week. You would have to make a decision to yourself, do I want to come out of pocket $800 something, okay, to buy back this call that I sold to preserve the value of $2,500 for the collateral of 100 shares for that call that was sold? I mean, you can do that and simply maybe even just sell another call. You buy back your call, roll it out, maybe roll it even further out to collect more premium, further dated, or even closer to the money. And then you can say to yourself, if that gets called away, that's fine. I did what I could. But I think it's even better just to give yourself the opportunity to close out the transaction altogether. Let the price, if it has momentum, like if this move continues, maybe you can say to yourself, oh, it went up another 5% tomorrow. That's where I'm going to start entering the next call sold, waiting for a small pullback, buy a call closer dated. Now you're into a calendar spread again, and you're preserving the value of your shares, but still having a little bit of downside protection. Something to think about. I think that's a decent way to approach it, but it really comes from the idea that you are now actively trading Tesla. You can just be a buy and hold investor, but I always say it all the time. For the past couple of years, Tesla has not gone anywhere. It hasn't gone anywhere. So just you can use all those shares that you have and maybe generate a little bit of recurring income when the pullbacks are, they're kind of bound to happen. And the pullbacks on Tesla can be so violent that a call that you sell one day, the next day that thing can be down like 70%. and you can close that call out, realize profit, and let shares, bounce back. Possibly so. So talking about bouncing back or dipping, I kind of tried to understand, based off the levels that we've had here, which are, like I mentioned before, so maybe some peaks from pricing from the past month or two, or what I think could be upside targets, which like gap fills and things like that to the upside. We were talking earlier that an upside target that, I like is something in the range of $313 to $330, which would be above the consolidation from right before Twitter was purchased by Elon. Let's move that out so it's a little bit easier to see. But if we were to kind of sell off tomorrow, it's not necessarily a bad thing. It just depends on how much of a pullback that we see. Maybe, tomorrow morning the markets are down because China or Japan's stock market isn't doing so great, or Europe came out with some terrible news, so the DAX and the FTSE are down and dragging down our futures market, and of course dragging down us pre-market. I kind of would want to see some levels respected of around $266, because we were talking about how that was kind of an important level. It was a level that was kind of respected when it came to our intraday action, right? We're seeing how it was having some resistance at 265. It tapped it a couple times. It even had a nice pullback, and that it just kind of zoomed up and kind of just bull flagged right through it with a small test at 265, successful, and it was just nonstop from that point on. So kind of if we have a pullback, kind of staying above or bouncing around the 266, 265 area, and maybe getting a slight buy towards the end of the day for people wanting to go long on CPI on Wednesday morning could be good. Or having a small bounce around 269 or 270 to go flat on the day, that wouldn't be too surprising. And if there's any bullishness tomorrow, maybe we get a small gap up, maybe like 0.25% gap up, a slight buy into maybe lunchtime, and then kind of a slow sell-off throughout the day as people de-risk for CPI. People are probably going to be selling calls at this point as well if you get close to the bottom side of the gap, because that's a natural point of resistance. And we also mentioned earlier that above this pricing, above like the 270, 280 area, there's just not a lot of volume profile here. And so pricing can move either dramatically down from that or kind of zoom through it because there's no volume at that point. Something I want to look at is a large time frame on Tesla, and what some people are looking at as far as kind of a pattern that could be emerging, where they were seeing that the beginning of this year's price action was like a spring to what could be a reaccumulation, a wick-off accumulation for Tesla, where you're seeing this point being the ultimate low before we start making some new highs. I don't think that's necessarily like a bad idea. I think long term it's something to think about. If we're to look at a monthly time frame and looking at Tesla on that monthly, this is pretty bullish looking. I mean, we're getting a MACD cross that we haven't had since 2019. And when we had it in 2019, what did we see? Of course, a really strong movement up over the course of some time. It was, let's see if I can get this to measure. It was something like, what the heck? A lot of percent, guys. Okay, I got a lot of percent. Let me get that measured out better. It's like 2,000 something percent. Okay, and that was from 4 years ago, and now we have it finally back. We're crossing over. So I mean, maybe in a longer time frame, we're talking monthly time frames. From a technical perspective, Tesla's not looking that bad, and essentially it's been being sold off, and the momentum for the past couple of years has been really, really negative. But we're slowly turning upwards, and that could be a good thing. So on kind of that really big time frame of Tesla, like if you're for the long-term investors out there, it's actually not looking terrible as long as we can get inflation under control and we don't drop into a recession. We're getting to that point where technically Tesla's looking like for a breakout, like a big breakout, to the point where recent highs are ultimately going to be, not recent highs, I mean all-time highs are going to be the target. I'm not saying when, maybe like 6 months, or something like that, or by the end of the year, that could be really awesome for a lot of investors who've been just waiting so long. To capture the long-term downtrend, it's something that we rejected, of course, before earnings, where we were flirting with breaking above this downtrend established by the all-time high. You can see how it's been pretty well respected by these 3 peaks, and of course by the price action on the earnings from Q2. So in a near time frame type of thing, if you can capture that, let's see what type of move we would need. If you can get, this is being annoying. If you can get 6%, if you close 6% above this downward trend line, above what would be a gap fill, that move would be really bullish. It would require CPI to be amazing. That would be incredible. A 6% move on Wednesday, let's say it's really great on Wednesday. You capture a 6% move, you close above the downward trend line. You maybe test it and keep going up from there. I mean, I don't see how that's just not bullish. I just don't see. But if inflation sucks and we fill the gap below, I mean, we get back into our expected move range. If CPI is bad, something happens terrible because of the book or something tomorrow, who knows? But just be aware that big time frame looks pretty good. Small time frame, we don't know. But kind of prepare for anything. Use calendar spreads to your advantage. Try to make some premium if you can. I mean, we talked about how the consolidations just can last such a long time. And I was making videos somewhere around the beginning of this consolidation after that strong move from the spring and summer, just to kind of give you perspective. That is almost 100 days of sideways movement. And it's just not that surprising because just Tesla's like that. All right, guys. Thanks so much for listening, and have a good night. Bye.